Welcome back to Spotlight. I'd like to go to my guest, Mr. Doug Harrell.
Yes.
Yes. Welcome to Spotlight.
Thank you.
Good, good. And of course, everybody knows our Financial Secretary, Neil Smith. Welcome to Spotlight.
Thanks for having us.
Yeah, you live here, and this is the first time you...
First time, that's your fault, eh?
let the people know I never invited you, right? But it's good to have you here.
Yeah, nice to be here, man.
Yeah. The Foreign Accounts Tax Compliance Act. What is that?
It's a piece of legislation written by the U.S. Congress to essentially compel foreign financial institutions around the world to report on any U.S. customers they might have in their institutions in broad terms. It's quite complex because it's trying to apply it to the entire world, but that's the genesis and the reason for the Foreign Account Tax Compliance Act, or Fatca, as we like to call it. Yes.
And the motivation comes from lack of tax collection.
Yeah, the perception that Congress has that maybe many Americans are using non-U.S. financial institutions to hold their monies and generate investment income that they're not reporting to the U.S. government. Because U.S. citizens are required to report their worldwide income on an annual basis, whether they live in the U.S. or not. And the U.S. has had this concern that a lot of tax dollars are escaping the U.S. tax net.
So there's already a law that says if you live overseas, anywhere you're American or you have a green card and you live overseas, you have to file income tax.
Yes, sir.
But for some reason, persons haven't been doing that, and so FATCA is to strengthen the enforcement of that law.
Yeah, this is a personal opinion, but I really think the motivation was aimed at U.S. citizens living in America that had the ability to use non-financial institution, non-U.S. financial institutions. However, when the law came into effect, it applies to all U.S. citizens regardless of where they live. Again, though, the FATCA didn't change their filing requirements. They've been around since the beginning of the tax code. It just makes it more easy, I guess, or more likely for the U.S. to identify those people that have money in foreign financial institutions that have not possibly reported to the U.S.
Okay. Are there persons or businesses that are excluded from FATCA or can be excluded from having to comply?
Well, the compliance level is at the foreign financial institution level, not at the individual level. FATCA causes foreign financial institutions that have any types of payments from the U.S. to either comply and report on their U.S. investors or customers, or be subject to a withholding tax on the payments made to them from the U.S.
But say I'm a U.S. citizen and I moved to the BVI and I actually live in the BVI. I no longer live in the U.S. or American territory. Can I be excluded from that? Since
Well, your reporting requirements are going to remain the same. There are some exclusions for de minimis bank accounts, let's say at a bank, where if your account is less than $50,000, then the foreign financial institution has the ability to exclude those accounts from reporting under FATCA. They don't have to look at the owners of those accounts. Those are small accounts. The IRS in the U.S. doesn't feel, that they're losing a lot of tax dollars on accounts of that size, which makes sense. So if that's what you're referring to, but the foreign financial institution has the ability to not report on those smaller accounts.
Okay. Because I know of many persons in the BVI, local BVI lenders particularly, that are American citizens.
Right.
Through naturalization, for example. And I'm sure they're wondering whether or how FATCA applies to them.
Well, if they have a U.S. passport and they have an account at a BVI bank, and the BVI bank is complying with FATCA, they're going to need to identify under the rules of FATCA who their U.S. customers are, unless they fall into one of those de minimis account balance thresholds. So let's say the person holds two passports, as I think could happen. They could have a BVI passport and a U.S. passport. If they present the BVI passport when they go to their bank as their identification, they accept that and look at it as a BVI passport. But if the place of birth in that BVI passport is a place in America or in a U.S. territory, the customer is going to have to prove that they're not a U.S. citizen. The bank will say, bring me a certificate that shows you renounced your U.S. citizenship. Otherwise, I've got to put you in the category as a U.S. customer because you were born in America.
What are the penalties for non-compliance?
Well, the penalties would be at the financial institution level, and for payments from the U.S. allocated to the accounts that are not in compliance, there would be a 30% penalty tax on any payments made from the U.S. to that financial institution that related to this account that wasn't complying.
Okay, I have to be a little clearer about that.
Okay.
Persons residing overseas who have significant cash or deposits or assets in the in a local bank, they're required to file.
Yes.
And if they don't file and the government finds out about it under Fatca, the individual of that business would have to pay.
Right. Okay. At the individual level, okay. That's another question. Obviously, that I didn't understand.
Okay.
Let's say under Fatca, 2 years from now, when the bank's reporting, and they report their U.S. customers, they've identified this person as a U.S. customer. They report under Fatca that this person has this account with X number of dollars and reports the earnings and so on and forth in the account. The way it's intended to work, but we'll see how things work in real life, is that would be matched up in the U.S. and they go, we don't have a tax return. We either have a tax return from this individual that doesn't include this income, which could be the case, or we don't have an income tax return from this person. Then the IRS will pursue those persons and try to collect the tax that they feel they're owed with potential penalties and interest.
Okay, so then there's another level is a business level. Businesses that have accounts in the BVI, whether the owners of the account lives in the BVI or not. Is that what this is primarily focusing on?
No, not BVI businesses, not unless they have.
No, I mean a business that's registered in the BVI, but the owners may live someplace else.
Right.
And doing business in this company, like an international business company, or from the financial services sector, for example. Persons who own those companies and doing business with companies registered in the BVI, but they live in America continually. Is that what Fatca is? Are those persons the persons that, or those businesses, the businesses that Fatca is geared towards making sure they get the money from, and not the individual, or both?
It's a mixture.
Are you understanding my question?
Yeah, it's a mixture, but in my opinion, the genesis of Fatca was the idea that many people living in America had bank accounts in non-U.S. banks and were not reporting the earnings on those bank accounts or investment accounts. That's the initial aim of Fatca.
Okay.
Now, obviously, it pulls a lot more information in than just that information. Now, if you have a U.S. person living in America that has a BVI company that's doing business and holds an account at a foreign financial institution that's complying with Fatca, they will have to look through that corporation and identify the U.S. shareholders, at least the greater than 10% U.S. shareholders, and report that ownership under Fatca to the IRS.
Okay.
So we'll get to that point. It will get to that information.
Okay, and so the explanation you gave me before about the 30% penalty, that relates to what again?
Withholdable payments from the U.S. The U.S. can only assess the penalty on payments that are coming from the U.S. to somewhere outside the United States. So it could be an payment of dividends. In the future, even payment of gross proceeds of sales of U.S. securities occur. So the only hammer, if you would, that the U.S. has are payments made from the U.S. to the offshore entity that's not being compliant with Fatca, or they have a customer that's not being compliant or giving up the information that's needed. So the 30% tax would not be on the account, the balance in the account. They don't have jurisdiction over that. That's in a foreign bank or non-U.S. bank, but on payments made from the U.S. source income, essentially. Yes.
So they'll tax a person in the States?
It'll be withheld before it gets to the bank.
Money that's coming from the United States out will be taxed.
Yes.
Okay.
Well, penalized.
It's a penalty, yes.
Now, what is the process that one goes through in complying with Fatca.
Well, do you want to take that one and talk about the IGA a bit?
Yeah. Well, what is going to happen? This is, I mean, things are still not 100% solid, even with the Treasury and the IRS. But what will happen is that the FFIs will register. The FFI, the Foreign Financial Institution, will register with the IRS, and you can actually do that now. They'll register with the IRS. They'll give you a number, identification number. They call it a GIN number. And then, in the BVI's case, on the completion of the IGA, which is the intergovernmental agreement that we'll sign with the United States Treasury, you would report to a portal that we'll set up. You'll report to that portal and say, this is a foreign financial institution. This is the GIN number that we've gotten from the IRS website, and these are the particulars of the information that you're asking for. You'll report that to the portal that we'll set up, and then we'll pass that information on to the United States authorities, the IRS, to be specific.
And if there are taxes to be collected or any monies to be collected for the IRS, how the IRS gets that money?
Well, that's an interesting point. What will happen is that if you are not filing taxes before, all of a sudden the IRS would be aware that you have this liability that you should be paying against. And like I said, the United States really can't do anything else except to tax the U.S. source income. So I guess that's what they'll do. I don't know if they could compel the BVI to collect the taxes for them. I don't think that's possible.
I don't think that's part of the deal.
So the only thing that they have is to be able to tax the U.S. source income. Any income that you have coming from the United States or whatever, they'll be able to penalize you on that.
And that's at the institution level.
And that's at the institution level. So you as a FFI who are reporting on the people below.
So a person with a FFI, a foreign financial institution, that's what that means.
Well, the foreign financial institution are the ones who will be reporting.
Would be reporting
on the individual account holders.
To the BVI government,
yeah.
And the government will be transferring that information
Right.
to the IRS.
Right.
And then the IRS will identify this person or persons in the United States and try to collect that money from them in the United States.
Well, they might not be in the United States.
Or wherever they are.
Yeah, because, as a U.S. citizen, you're taxed on your worldwide income. So you have this individual, a U.S. citizen, who should be reporting on this, and you're not reporting on it. So the foreign financial institution is the one who will be penalized.
Well, they'll be penalized on payments made to the foreign financial institution, but I
coming.
think what you're getting to is those U.S. customers that's been reported by the foreign financial institution to the Internal Revenue Service, that information is now available. The IRS has that information. They'll match it up and see, is that information been reported on their tax return? The way the IRS generally works, if they discover that there's an amount not reported on a tax return that they feel should be, they'll serve that person some sort of a notice saying, this doesn't match up. You may not get audited, you may come clean. The IRS works in many different ways. Generally, if they notify you that they feel you owe this or that, and you pay it, that's what they're after, is collecting tax. You could get an audit. They could look at all of your operations. It depends on the level of underreporting and that sort of thing. But at the end of the day, whether right or wrong, the IRS is really only after the tax they feel that's due. And so if they can collect that through any mechanism, through a notice or an audit, then that's the way they would go.
Okay. We're going to take a break for a word from our sponsors, and we're going to come right back with more on the discussion of Fatca right after this.
Spotlight is brought to you by the National Bank of the Virgin Islands, Clarence Thomas Limited, the BVI Tourist Board, and CCT Global Communications.
Talking Fatca, not Fatca. I got help on my mind. We've been talking Fatca with KPMG specialist Douglas Harrell and our financial secretary Neil Smith, and it intrigues me about all the seemingly regulations that's coming down from the international community regarding financial services generally,
Right.
and the need for jurisdictions, low tax jurisdictions, to have to give information about people doing business in their jurisdictions. If you're a country and you decide that you don't charge any taxes because your tourism
That's your right.
and your other businesses,
That's your right.
your other exports are able to sustain your population and provide the services you need, I can't see what the issue is with that. Somehow it seems as though our financial services is an issue for the international community because we are a low tax jurisdiction, right? That's basically what.
Well, it is beneficial for someone who lives in a high tax jurisdiction to be domiciled or do business from the BVI because they won't be taxed on activities at a rate that they'll be taxed in some place in Europe, for example. Right.
Right, and
that's everyone has that right, really. I think what the argument, I know this is the argument that the higher tax jurisdictions have is that, hey, these citizens live in our country, and we, in some of these places, let's say Norway, for example, where you basically everything is paid for. You go to school for free, they got some of the best roads, best healthcare, that type of stuff. These things come at a cost, but we cannot sustain these social benefits if our citizens, instead of paying us the taxes, and not paying us the taxes because they're using jurisdictions where taxes are not high, so to speak. But that's their argument. And what they're saying, they're all citizens, and we want to know where they have money. And that's, I guess, the argument that they're using because they're the ones that benefiting from all of these things.
Yeah, but the simple answer to that argument is that you raise taxes to match the services that you want to provide on your citizens. You don't care where they got the money. If you providing better roads, better schools, better healthcare, better recreational facilities, a laptop for every kid,
Right.
and you need $100 billion to do that, you charge the people in the country the $100 billion. If they want to hide the money over in the Cayman,
but that's exactly
on the BVI,
the
you charge a tax.
That's exactly
why are you
the point.
interfering with the
Well, they're not really interfering us ultimately, but who they're really trying to get at is the citizens. So that instead of you making a monk out, like yourself, maybe 200K a year, right? And I just joking. Right?
No, that's fine. Yeah, that's about right.
And
I'm just joking.
Yeah, man, we together. And instead of reporting on that, so that at 30%, let's say they'll be getting that's about $60,000 a year. You report that hey, you only make 50,000, and you make it. They're saying that that's not fair because you only paying $15,000 or so when you should be paying $60,000, and here you are. You're getting some of the best education in the world. You don't have to worry when you get sick and all of those things. What they're saying is, hey, that's not fair. And that I'm not advocating for them now. I'm just saying
we have an argument, yeah.
And that's not fair. And you go to this low tax jurisdiction and you put your money there, or you say that your company is based there, but you're reaping all the benefits, but you're not paying for the benefits of which you're reaping. I guess that's the argument.
Yeah,
that's what they tell us.
Yeah, I don't want to go too far afield, but those are just bad citizens. That they don't want to take care of people in their country, and and they really have a problem. And they should just leave us alone. But that's my view. The question though is why we have to comply when why can't, what's the penalties for us? Is it that people are going to, is it really true that those same people that we're talking about that are just bad citizens of their country and don't want to pay any social bills at all, they're greedy and disgusted and despicable and they want to keep all the money for themselves, will those people still want to do business with us more if they could hide more? As opposed to do business with us? Because we keep thinking that business is going to drop off. And I'm saying business should increase.
Yeah, well, you see, what their countries would do, right, is they would impose penalties or impose punitive actions against jurisdictions like ours. You see, so then it makes it difficult for us to operate.
For example, I mean, what can they do to us if we don't comply?
Blacklist?
Yeah, the blacklist, for example, is a perfect example.
And what would that mean?
Which says that if they find out that you're doing business in the BVI, they're going to impose, I think it's up to 75% withholding or something like that.
Like any payments going to an entity, let's say in the BVI, if they were blacklisted by a country. This is just an example. How they make the penalty work. Any payments made from their country to the BVI, they put a very high withholding tax on that, up to, some countries go up to 75%. So then it's difficult to do business here. So then that really hurts because...
And that word spreads.
Yeah.
But you use, on another point...
So they use the financial structure to enforce whatever it is they need to enforce regarding on the financial services sector.
Right. The counter argument, though, which is one that jurisdictions like ours that always made, is that, well, especially the BVI say, hey, secrecy was never our business in the BVI. Confidentiality is, which is a basic common law principle, right? And if someone can use our structures to make their tax burden lighter, using the existing laws, what I call tax arbitrage, I guess, using the discrepancies between the tax law in the US and the BVI and UK and South Africa is a good place that does a lot of these things. Hey, what's wrong with that? Because it allows, with big companies, for example, it allows things that would have otherwise been $10 to cost only $2. Essentially what we're saying is that this facilitates global commerce. And if you create a situation where people cannot find a commercially competitive, global effective tax rate, then essentially what you're doing, you're probably making it a lot more difficult. Or you're probably reducing the standard of living for a lot of people around the world, or even in some of the quote-unquote first world countries. So there's an argument both ways.
Okay. Yeah. Well, there's a method to my madness actually. I think that we in the territory need to understand what the actual leverage is, so that when we start being angry about these impositions, that we get a sense of our position, our global position. Right. And how difficult it is for persons like yourself and Robert McTavius to negotiate through these minefields of regulations and demands. Because we have a tendency to make it seem as if you guys are doing something wrong. And
well, you see, that's one of the things that we need. These are not my words, These are some of our elected officials' words. We need a national debate, a national discussion on our core competencies in the BVI, which is financial services and tourism. We need a national debate where we could sit down and have a discussion. Those of us that know things, disseminate the information to those that might not be, they're not in the business, so they don't understand some of the issues, and we have a debate so that we could really understand what it is we faced with, right? And then I think we'll be able to move forward and in a more I guess, decent way.
Well, a united way.
A united way,
a united way, yes.
And we obviously won't all agree, but we'll all understand what the problems are. And the one thing I always say is that discussion is healthy, but to have the best discussions, we all need to understand the problem, and we all need to want to achieve against a common good. Now, we might have different methods of achieving a common good. But once you have those things, look, we want to do what's best for the BVI, right? And we have the same information. Now, you might want to go to Buck Island, to go to Pitt Island, to come back. I might want to go West End to come back.
You might even be able to come up with better ideas.
Exactly.
Yeah.
That's where we need to get.
So in the few minutes we have remaining,
Right.
I would like for us to go over Fatca, summarize Fatca again. I'm concluding that it's not as bad as it's purported to be.
No.
And it's not gonna have really any major impact on our financial services sector.
I think that's correct.
Yeah.
Okay.
Additional costs, but I mean, the whole world's dealing with it. We're not in a
Okay.
vacuum here.
So the point is that citizens of the United States and resident aliens, or aliens with a green card,
Right. Yes.
right, have always had to pay income tax.
Always have to file the tax.
All have to file for income tax, the tax returns, regardless of where they live.
Yes.
Exactly.
That doesn't change.
That
That's
has
not
not
changed.
changed.
That's
not
not
changed.
impacted by FATCA. No.
Taxes are not being increased for those persons.
No.
Those persons. And basically what the U.S. government wants is to have it reported to them. Foreign financial institutions, companies companies that Americans have overseas doing business, they need to know
What the incomes are.
what their incomes are,
Yeah.
so they could get the proper tax from them.
Yeah.
Our foreign financial institutions in the territory partnered with the government and recommended that they preferred to report to the government of the BVI as opposed to reporting to the
Directly
government of the
to-
United States
yes.
directly.
Yes.
Right? And that's important for us to agree to because we need their investment in the territory to sustain our economy.
Yes.
Right? I'm trying to get a
Yes,
summary
you're
going here.
breaking
I think
it
you
down
got
good.
it. Yeah.
You're breaking it down.
So it's not something that our government initiated. It's not something that we arbitrarily come up with out of the blue that we're going to just take on the responsibility of reporting to the United States.
No.
Our industry partners decided that this is what they prefer.
Yes.
It helps us to sustain our economic growth and development, to accommodate them.
Yes.
And here we are with this reporting mechanism, which requires a computer setup.
Yeah, I mean, based on our discussions, it's probably just going to be a server. You'll have a backup somewhere. It'll be a server.
Okay. We're going to put new legislation in place to strengthen the coercion of those same companies.
Yeah, well, the legislation in basic principle, based on investigation, exists already. It's a Mutual Legal Assistance Act, and we just amend. Well, that's getting technical, but yeah, it exists. Just augment the existing legislation. Yes.
So that persons who have been found not to report or comply with the reporting to the BVI would incur some kind of penalty?
How
would we manage
well,
that?
the augmentation or the amendment to the existing legislation would facilitate the agreement between the BVI government and the U.S. government. Under that legislation, the competent authority, which is in the Ministry of Finance, I think right now is the International Tax Authority, can, if they find that someone is not doing what they're supposed to be doing, they have some enforcement powers, so to speak, to make them give the information. I doubt very strongly, though, that the FFIs would avoid making it.
But in the event there's some form of penalty to be administered.
That could be administered by the
there's
BVI
non-compliance.
government. Right, by the BVI government could actually do that to force them to give us the information so we could give to the IRS. Yes.
Okay. And so, and what am I missing? What am I leaving out here in that summary?
I'll allow Doug to say something, but one thing I want to say too is that and Doug, you go correct me here, if U.S. citizens were reporting on their global income, there was 100% compliance. There'd be no need for Fatca. There'd be absolutely no need for it. So it's a mechanism to improve compliance with what you have as what is an obligation on you as a U.S. citizen or alien resident.
Okay. Doug, you want to add, multiply, or subtract?
Well, one or two of those. Reiterate to try to tear down some of the misconceptions again. I know we said it before, but I think it's good to say it again, that Fatca did not create U.S. tax filing requirements. They've been there since the beginning of the U.S. tax code. It just makes it another mechanism for the Internal Revenue Service to possibly discover people who are not complying. As Financial Secretary referred to, if you're filing all your tax returns and always have been, Fatca has zero impact on you. And it's really just another mechanism to, I guess, to encourage or compel or give the IRS more information to encourage you and compel you to, as U.S. citizens living anywhere in the world, to file your tax returns and pay U.S. tax if necessary.
Okay. I think we got the information out. And I think what we want to know is that no impact on financial services, no additional costs in terms of administration, or minimal additional costs in terms of administration. It's certainly in our best interest to have good relationship with our local industry partners as well as the international community, whose financial system we are using.
Right. I think maybe I would even stretch and say not even so much no impact on the financial services industry, but positive impact on the financial services
by industry. Being a partner,
right,
and the global partner in the financial regulations, our reputation is enhanced.
Right. Yes. As a legitimate place to do business.
Thank you very much.
Pleasure.
It's a real pleasure
to
see you. Thanks. Don't be a stranger. Yes, we've been having just had actually a fascinating discussion with the KPMG specialist, Mr. Douglas Harrell, and about Fatca, and Financial Secretary, Brother Neil Smith, and we talk about the whole Fatca Act and what it means to the world, what it means to us, and I think we've cleared a lot of the misconceptions that we've had over the past several months. So I want to really, really thank them for coming and clearing those up and shedding some light on the subject so that we could breathe easy. I know we're very jittery when it comes to our financial services. It's only a mere 60% of our budget. And nothing much to speak of. Just try losing 60%, 60 cents on every dollar, and see how you manage with your personal finances, right? So I want to thank them for being here, and thank you for watching. I hope that we were helpful in allaying your fears and bringing the factual information to you. Spotlight is seen here on JTV Channel 55 Tuesdays at 8 p.m. and rebroadcast Sunday afternoons at 2:30 p.m. You can get Spotlight on demand at jtvlive.net. Again, thank you for watching. Thank you for your words of encouragement. Continue to email me at jtvspotlight@yahoo.com. I'm Edjuenka, reminding you that when the spotlight is on, you see the facts. Peace and blessings.
Spotlight is brought to you by the National Bank of the Virgin Islands, Clarence Thomas Limited, the BVI Tourist Board, and CCT Global Communications.
Welcome back to Spotlight. If you've just joined us, I'm here with the KPMG specialist on Fatca, Mr. Doug Harrell, along with the Financial Secretary, Neil Smith, and we're discussing Fatca. I was trying to get a handle on the process, and which leads me to the government's role, and I sort of get the sense that the government is merely a reporting agency.
A reporting agent, yeah.
Agent.
Really, yes. Because really the obligation is on the foreign financial institution. I mean, that's where the whole thing goes. But in consultations with the industry here in the BVI, we recognize that they would prefer to report to us as opposed to reporting directly to the IRS. And in terms of business, it actually is a competitive edge, so to speak. If you're coming out from outside and you want to know, well, if I go to the BVI as a foreign financial institution, will I have to report directly to the IRS, or can I just report to the authorities there? And, you know, some of them probably feel a bit more comfortable reporting to us and to the U.S. authorities as well. So it is something that we decided to have this intergovernmental agreement because of the comfort level and what the industry, the vast majority of the industry might add, would prefer. But we're just a reporting agent, really. We don't look at the information or anything.
So that doesn't give the BVI any additional responsibility to the IRS or to the United States government? So you don't have to make sure the reports are accurate. It gives you, we have absolutely no responsibility at all with the compliance and the reporting.
Well, we don't need to check to make sure that the information is accurate. We've cleared that up with Treasury. They just want to know that the information is coming to us and it goes on. It would be in our best interest to try to encourage FFIs in the BVI to comply. That would be in our best interest, and that would be in the interest of having a good partnership with the United States. So that's understood. You have a treaty, both of us are doing it in good faith. So you just don't want to say, well, yes, I'll report these people to you, but they have 20%, let's say 50% of the FFIs in BVI are not complying. That wouldn't be in good faith, right? So they would expect that we would encourage, that's a soft term, right? We would encourage the FFIs to report to us so that we could report the information to the IRS.
And what form would that encouragement take?
Well, you know, there's some compulsory powers that exist currently in the government to say that, look, we want you to report, so we could invoke those compulsory powers. But, you know, like I said before, that those things don't happen.
And
you know, by law, we have those that power in law.
And do we have the infrastructure already developed for that sort of encouragement?
You know, that was one of the initial concerns we had. And as we studied the problem, I guess you'd say, a bit more, we realized that the infrastructure that we'll need will be very minimal. Essentially, what you're looking for is a secure server that the FFIs would report to, you know, on the web. You probably retain information on the server and then you transfer the information out. So the infrastructural costs will be minimal based on our investigations and conversations with the IRS.
But it seems as though, from what you just said, that we have some level of enforcement responsibility. And you use the word encourage, right. and that the form that encouragement is to take would be some type of legislative coercion.
Well, exactly. Currently, we have this piece of legislation we call the Mutual Legal Assistance Act, which we use to administer tax information exchange agreements, for example. The Fatca, or the IGA, the Intergovernmental Agreement, which we'll negotiate now and eventually sign in respect to Fatca, will be amended onto that legislation. So it'll be part of that legislation. That legislation gives the competent authority the ability to make you produce information. But like I say, I don't think that, well, I'm hoping that it doesn't come to that, you know?
So we'll have to have some kind of investigative agency to check to make sure that we get a considerable good percentage of compliance.
Well, we know who the
financial institution.
We know who the FFIs in the BVI are already. They already have reporting requirements. Right? They have to report to the Financial Services Commission. They have to report to Inland Revenue. They have to report to the FIA, Financial Investigation Agency. So we know who they are. So we could cross-check the records to make, to see whether or not we have acceptable compliance rates. But I personally don't anticipate any issues, to tell you the truth. Once people understand, the FFIs do. But I think that once, there's a general understanding that, hey, this is not really a beast like how we thought it was at first, then people just do what they have to do,
Okay, so a minimum amount of costs would be incurred
Right.
By the territory regarding the compliance with Fatca. Then
Yeah, well,
it's safe to say that.
A minimal amount of cost for the BVI government.
The BVI government.
I expect that FFIs would have some costs, some administrative costs, because they're going to have to collect a bit more information than what they were used to. So they might have to hire extra staff. I don't know. So there might be some, but that's the cost of doing business for them. But I expect that that'll happen.
Okay, so we're going to need no new bureaucratic structure.
No.
Some additional legislation.
Well, the legislation, the legislation exists, and an amendment to the legislation, which would be fairly simple. I don't think it even needs to go to the House of Assembly, based on how the legislation is done.
Okay. Now, is this being forced upon us? By a superpower. What's the authority that says that a foreign government can come to another government and say, listen, I want you to make sure that all the people doing business in your territory that are U.S. citizens go through this process so we can collect their taxes?
Yeah, there's absolutely no obligation on behalf of the BVI government or any foreign government for that matter to decide to sign an intergovernmental agreement with the United States. The reason why the obligation is on the foreign financial institutions to report to the Internal Revenue Service in the United States. Right?
So we don't
have to
participate in
BVI government doesn't have to participate. The FFIs, the foreign financial institutions, have to do the reporting. But what we found in our consultations with the industry is that they would prefer, they think that it's good for business to feel more comfortable to report to the BVI government, as opposed to having that obligation to report directly to the IRS.
And the IRS has accepted this relationship.
Yes, the IRS actually, I think, prefers this relationship.
They prefer it, yes.
Yeah.
Okay. What is the Financial Services Commission's role in this whole Fatca?
Basically none. Their role is regulation. That hasn't changed, and it won't change as a result of this. But what is interesting is that a lot of the information that the FFIs and the BVI have to provide to the Financial Services Commission, probably about 80% of the information will be the same type of information that goes to Fatca. Well, goes to the United States through Fatca. But they really don't have a role to play.
So you're talking about the gathering of an additional, say, 15 to 20% of information to buttress the information that is already given.
Yeah, exactly. They'll probably do it on a separate, they'll do it on a separate form. But the point is that a lot of information that's being provided, they already could provide it already because they're already doing it.
A lot that's been requested is already being provided.
Right. But there's some additional things that might be a bit more difficult than the information that they were provided in the first place. But, it's a lot I think they could do it.
So what would the intergovernmental agreement consist of? Why do we have a need for that agreement?
Well, in the intergovernmental...
What are we agreeing to?
Yeah, basically it says that, to be not vague, but to be fairly simple, is that, we agree that we'll facilitate the flow of information in the BVI from the foreign financial institutions that are in the BVI to the United States. We agree that there'll be some confidentiality clauses attached to that, so that you won't be giving information out to other people. I don't think there's any prejudicial clauses in there. But it's just a basic information exchange agreement to say, look, we provide this information, states when it'll go into force, that type of stuff.
It is-
And gives you a list in the annexes of what is defined as a foreign financial institution, which entities in your country would not have to report. For example, the government of the Virgin Islands would not have to report as an institution, right?
Right.
Or the Social Security Board, for example, would not have to report. So it gives you, it defines, has some definitions and things to make it clear on exactly what, who is supposed to report in, and, some basic parameters around that.
Okay, so I guess it's safe to assume then that if the industry partners
Right.
or the stakeholders are comfortable with Fatca,
Right.
then there is no impact on our financial services sector.
I wouldn't say that there's no impact. The cost of business will go up a little. The bigger the company, the less the impact would be, I would guess, because the economies of scale. But I believe, and I'm getting this from the industry now, I believe that not having an IGA would probably adversely affect business as opposed to having an IGA. And I could be corrected by the industry. Doug is in the industry a bit.
Well, it's my understanding, and I'm based in the Cayman Islands, and the decision was made there to go with the Intergovernmental Agreement Model 1, the same as the
Model 1.
BVI, and that was through consultation with the financial services industry. That's what they told the government they wanted.
Did before that.
Because true for us, the people, the understanding of the people of the BVI, knowing the importance of financial services to the economy, is always concerned about what the provision of additional information to the international community would mean for our income. So
that's probably a separate discussion, but it's one that the people in the BVI need to have. There is a trend towards more information sharing. And in the future, we were saying this a few minutes ago actually, in the future it's becoming more and more difficult for individuals to hide activities that they're doing in
financial activities.
Right. It's becoming more and more difficult. So what I believe will happen is that if you're not part of that information sharing community as a territory, let's say the BVI decides that, hey, we're not going to participate in this trend or this global movement, you'll be viewed as a place that is less than above board, as not being transparent and not being a good partner to do business. And as a result, any company that does business in a jurisdiction that is not part of this information sharing regime, so to speak, will be viewed in a very negative light. And I believe that'll be bad for business. What we need to do in the BVI is recognize, and we've recognized this on various levels, I guess, in various degrees, that we need to make up in our minds that we have to do this. It's coming, and we need to adjust ourselves to be part of this information sharing regime, as I call it. And a lot of this has been precipitated by things like the 911 attacks, where we realize that jurisdictions, what they call offshore jurisdictions, for example, I'm not saying the BVI, there are others, were being used to hide and to funnel funds that were being used for terrorist activity, for money laundering. Well, that's money laundering anyway, I guess, in a sense. Proceeds from crime, whether it's drugs or racketeering and those type of things. And what is happening is that the net is just being closed on that. Right? This is a national security issue in some cases. It's a just plain out tax collection issue in other cases. So what is going to happen, or what is happening, is a game is changing to where if you want to reduce your tax burden, which is a legitimate thing to do. If you want to reduce your tax burden, you just have to use, the tax arbitrage, I guess, to get it done. And even that, there's a fine line,
Right.
or whether or not that is legal or not. Right? But it's just becoming a bit more difficult to hide funds in that type of stuff. And we need to recognize and be aware that this is something that's inevitable, and adjust ourselves so we could participate in it and be successful.
I have a off the wall converse question regarding what you said. We got to take a break, but it seems to me that if information sharing is possibly harmful to the industry because the industry partners want to have maximum commercial secrecy, right? That we would do more business if we don't comply with the international community. Well, let me before you get to that, let me take a break. We'll come right back right after these words from our sponsors.
Spotlight is brought to you by Tortola Concrete Limited, Clarence Thomas Limited, and H. Lavity Stout Community College.